Welcome to Market Movers. I'm Jim Urio. We are days away from the most important economic data point of the month, and that's the U.S. jobs data. Last month it was a little disappointing, and it started a bit of a pattern where we saw some weakness after that. We're looking at using the E-mini weekly options as a way to create exposure to this event. Joining me is Chief Investment Officer of Kingsway Asset Management, Scott Martin.
Hi, Jim.
Scott, is the numbers soft? Does it hurt the stocks, or is this one of those things where we then can convince ourselves that we might take the Fed out of it a little bit?
And that's the interesting point nowadays, right? Is the Fed being out, is that a good thing? Because I believe, Jim, that the market is used to the Fed being back in play, expecting the economy to be healthier. I think if the Fed steps out, I think that's a bad sign for the markets and
they're
economy.
Going to take that as, oh my gosh, things might be worse than we think.
And the Fed could have made the wrong moves all these times.
Yeah, that's a good point. Now, the French election is Sunday night. Is there any chance?
Of course there's a chance. I mean, think about Brexit, think about the election November 8th. Come on, man. It would tell you, though, the market does not think there's a chance because protection is very cheap right now.
The VIX trading about 11. Credit spreads very narrow. The market is telling us without...
Single integer handle, by the way, in the VIX this week earlier.
Without any question that there's no chance. That does scare me a little bit, too.
Me too.
Now, before we dive into our trade discussion, I'd like to point out that, as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risk or create additional trade opportunities, not as recommendations or advice. Prices and movements will vary. When we're talking about these trades now, the underlying June S&P contracts trading about 23.83. What do you think?
So I talked about protection and talked about taking what the market gives you ahead of these big events, whether it's non-farm or whether it's French elections on Sunday night. So actually what I did, Jim, is I looked out to next Wednesday for expirations on these ES trades. So looking at the 2360, 2380 put spread in the ES, again, expiring next Wednesday, it's going to cost you about 5.5 ticks, so you risk about 225 that you put out to put the put spread on with a potential max gain of 775, because I do believe that even if the number's good on Friday, that's fine, that euphoria is going to wear off. And also, if the French election comes out as expected with Macron winning, again, that euphoria wears off and you get some pullback in the S&P.
I have to tell you, I like this trade so much that I actually went and looked to make sure the price was right. This one expires Wednesday the 10th, and it's 3 or 4 ticks under where the market is right now, and you get it for 5 ticks. I really like that trade a lot. As you said, protection is cheap. I'm looking at something a little different. I'm looking at buying the May 8th. That's the new Mondays, which have good liquidity now. I'm looking at buying a call spread and buying a put spread. We call that an iron condor because we like to have flashy, fancy names in the options world. I prefer to think of it as buying a call spread and buying a put spread. So if the market breaks out in either direction, you can make money. I'm looking at buying the May 8th, 23.95, 24.05 call spread, and buying the May 8th, 23.70, 23.60 put spread. So for this one, you pay 4.2 ticks, so you risk $210 to make a potential $290. Okay, the jobs data. A month ago, we saw 180 expected, and we saw 93.
We're just about 100,000 under. Yeah.
We see 180 expected this time. Is it going to be disappointing again?
I think it's going to be disappointing again, Jim, because I believe that's kind of the new trend, is this softer than expected economic data. That's why I put on my put spread, by the way, because I think the market doesn't react as well to poor data right now as it used to.
Particularly when it seems like the Fed is hard-headed and really wants to be on a tightening path. Thanks for joining us in this special edition of Market Movers. I'm Jim Urio, where we're helping to make you be a better trader.